The term bridge loan can cause some confusion when you're seeking private financing secured by real estate. The way you define a bridge loan may be totally different than how the lenders you encounter define the term. In this video, I'll clarify a few meanings of the term bridge loan with various loan scenarios, and I'll give you my suggestions for the proper terminology you should use when you're requesting a loan from a private lending company, which are also known as bridge lenders or hard money lenders. I'm Rocky Butani, founder of PrivateLenderLink.com, where investors and brokers can easily find direct private lending companies. If you are in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. The confusion with the term bridge loan is more prevalent in the residential real estate space. In commercial real estate, it's fairly easy to define. In fact, most of the private lending companies that focus on short-term financing only for commercial real estate are commonly known as bridge lenders, whereas in the residential investment sector of private mortgage lending, the terms private lender or hard money lender are more common. Regardless of whether the subject property is residential or commercial, there are several types of bridge loans, so you have to be specific when searching for lenders and when you're communicating your loan requests to lenders. The most common bridge loan scenario is for an investment property purchase. No rehab or construction included, just a straight purchase. The investor has a cash down payment of 20 to 50%, the deal gets done fast, and they have a plan to refinance in less than 2 years. When referring to this type of deal, call it a purchase bridge loan or an acquisition bridge loan. If the plan is to renovate the property immediately after the purchase and the loan needs to include funds for the renovation budget, the terminology you use is going to vary depending on whether the property is residential or commercial. In larger commercial real estate deals over $1 million, lenders typically use the term value add to describe loans that include a renovation budget. So you want to call this loan a value add bridge loan. It's very important to specify the value add part, because a lot of commercial bridge lenders do not provide funds for renovation. Now, if you're seeking financing for a residential investment property deal that includes renovation, don't even call it a bridge loan. Depending on the exit strategy, you can call it fix and flip, fix and rent, or simply purchase and rehab loan. Similar situation for ground-up construction financing. Don't call it a bridge loan. Just call it what it is and include the asset class to be more specific. For example, multifamily ground-up construction loan or SFR ground-up construction loan. Adding even more confusion to this topic, many private lenders in the residential space now use the term bridge loan to categorize all of their short-term loan programs. So purchase bridge, fix and flip, ground-up construction are all categorized as bridge loans. The lenders doing this are the ones that also offer long-term rental loans, and the terminology comes from the institutional secondary market, which puts private mortgages into two different buckets, bridge loans and term loans. Another phrase used in the institutional capital markets is residential transition loan, but you won't really see lenders using this phrase when advertising to the public. Another bridge loan scenario that's totally different from the others I've mentioned thus far is commonly known as buy before sell. It's essentially an exchange. You want to purchase a new property by using equity in a property that you plan to sell, but you have to buy before you sell. In commercial and investment property deals, this is sometimes called a reverse 1031 exchange. So if this is the type of deal you're seeking financing for, use the term 1031 exchange bridge loan when talking to lenders. If you're seeking a bridge loan for an owner-occupied home, you want to call it a primary residence bridge loan. It's very important that you mention the primary residence part, because the majority of private mortgage lenders will not lend on owner-occupied homes, and you don't want to waste their time or yours. These are consumer purpose mortgages which are highly regulated and not possible for private lenders to consider, except in California. The state law in California has an exception that allows private lenders to provide bridge loans to homeowners that are moving within the state. At this time, I don't know any private lenders that offer primary residence bridge loans outside of California. A bridge loan does not have to be for the purchase of a property. There are lots of refinance scenarios that need short-term financing. It could be a situation where the existing first mortgage is maturing, or the investor wants to cash out equity to use for another investment. The terminology for these scenarios is very simple. Just call it a refinance bridge loan or equity cash out bridge loan. If you have to keep your first mortgage in place and want a second mortgage cash out, call it a second mortgage bridge loan. There are quite a few lenders in California that consider second mortgages, but the funds have to be used for a business or investment purpose. For most other states throughout the country, second mortgages are extremely rare in private lending. The challenge with the term bridge loan is it's just too broad. In our industry, we have a similar dilemma with the terms hard money loan and private money loan. If you use our website privatelenderlink.com to find a lender, you'll find that we currently use these broad terms to categorize lenders, and it's definitely not ideal. We do have plans to restructure and add categories for various bridge loan scenarios, but in the meantime, you'll still find it to be a valuable resource when seeking a bridge loan. If you found the content in this video to be useful, please click the like button and be sure to check out our other videos about private mortgage lending. Thank you for watching, and see you in the next video.